Welcome back to Market Wake Up. My name's Jordan. This is John, and you're watching the one-stop shop to get you up to date with everything you need to know ahead of your trading day. John, it is Thursday, the 17th of October. Let's get into it. Good morning, John. Good morning.
Morning.
How you doing?
Good afternoon, mate.
Good afternoon. Yeah.
Good afternoon for you.
It's a warm one today.
Is it? You look like you got a jumper on though.
I know. I'm saying that. I'm flustered. I'm like, I haven't had a chance to consider it, and now I'm considering it and thinking, bloody hell, I'm a bit hot.
You've been that busy today. You haven't even thought about the weather or your temperature.
Been like that. It's been like that. Musclay, good morning, good day to you. Anyone else popping in, make sure you say good day, give us a wave, tell us where you're tuning in from. But John, where are you tuning in from today?
I'm tuning in from Lichfield.
Oh, well, that's
sunny Lichfield.
Sunny Lichfield. I like that.
It was actually, well, I haven't actually checked in the past half an hour or not, but the sun was breaking through the clouds when I last looked. But I've been at these screens since about 6 o'clock this morning, so
really?
I feel like I've been here forever.
Interesting. All right, what have you enlightened me? Why have you been at the screen so early?
I've just been looking at some updates to my charts and stuff. Sometimes I like to, or what I've been lacking recently is updating some technical analysis. Oh, really, Richard? Interesting.
Interesting.
Drop me a message. We'll get a TradeDelicious Market Wake Up meetup going on.
Yeah, I was born around the corner from Lichfield too as well. Look at this, small world. I don't live anywhere near now. I can tell you that for free. But yeah, okay. So you're waking up this morning. Anything catch your eye?
Yeah, a few things. Obviously, I've just updated sort of my sort of key markets that I watched recently. Obviously, there was data as well overnight in Australia, so wanted to take a look at
data in the world.
Most important data in the world. So I was taking a look at kind of the impact that had. Obviously, it had a little bit of a boost to the Australian dollar because we saw a little bit of an uptick in the employment change, right? A little bit. We did get a revised figure on the previous number, but came in at 64.1k. Unemployment rate remained the same, 4.1%. So would be very interesting to see how this goes forward, though.
Yeah, I mean, we say remain the same, but it didn't. It went from 4.2 to 4.1 just a month earlier. So it remained the same as a revised figure.
Yes.
Right. So it was 4.2. As far as we were concerned, last month was 4.2%.
Yeah.
Then it got revised to 4.1, and then this month was 4.1. So you can look at that and be like, oh, yeah, its data's the same. But it's like, well, and this is the fun with jobs data. We spoke about this yesterday, revisions. It's like, it's not necessarily about the release itself. I'm waiting for the revision. I'm waiting for what happens later, because that's when we've seen some of the massive revisions we've seen this year with jobs data. But yeah, employment change, quite good data.
Yeah. I mean, the problem with the Australian dollar at the moment is the global problem. It's the China problem. It's the China problem, and that's going to have a massive weight on what happens. Obviously, I think it's 41% of exports from Australia go to China, and a lot of that is the sort of iron ore industry. Obviously, we know what the situation is with China and its sort of property situation and development situation, so not necessarily in need of iron ore really at the moment, are they? So it's going to have a massive weight on what happens to the Australian dollar over the next sort of short period, or at least to the end of the quarter, I think. So yeah, I like this data from Australia. I mean, we've talked about this for a little while, haven't we? We've said the Australian data actually isn't that bad in terms of like growth, right? But it's just being absolutely hammered by the risk of China.
I think if you remove this risk of China right now, if China were just performing, we'd still be in rate hike territory.
I think so.
I think the RBA would still be lifting interest rates within reason, but I think it'll be in and around it, which I think's just an interesting scenario because, as you said, the data's fine, but Yeah, the sentiment's not. The data's fine, the sentiment's not. And that's now the good thing about that is sentiment is influential. So if the RBA or the Australian government do want to change that sentiment, they have the power to. They can come out and just say something. Sentiment, and that's what China tried to do. China felt like they were getting shorted because of sentiment. So they said, hey, we're going to deliver a stimulus, and look at the rally it caused. Did they actually deliver anything? Like, no, not really. They did, but Jesus, I mean, come on. What was that? So it's, that's the good thing about the weakness in the Aussie dollar from an Australian point of view. From an investor point of view, that's a risk, is the fact that the RBA can come out and go, let's play it. Let's have some fun.
Yeah. And obviously, a lot of my trading's based around where hedge funds are positioned and stuff. And they have considerably changed their sentiment on the Australian dollar right now. So that makes me not really want to be a buyer at all. So, seeing them get aggressive, which usually leads to a top, and the extremes that are witnessed, I was like, this isn't a market that I necessarily want to be buying right now. Obviously, small macro insights between that can help price sort of fluctuate. So obviously, positive data today, price might pull back a little bit, but in the grand scheme of things, I don't think it's a great one to be a part of right now.
You still short?
I was short yesterday. Took my position out overnight before the numbers came out, basically. Actually, just after the market closed, I ended up taking my position off.
Smart.
Yeah, just waited for
it. I think it was smart. Well, did it end up being a smart decision? I think it was a smart decision.
Yeah, right? Yeah. No, it was a good trade. Wasn't the most rewarding trade I've ever had, because it was quite actually a slow-moving...
slow burner.
Slow burner, yes. So it wasn't the most exciting or wasn't the most interesting trade I've ever been involved with. But it came to a positive result. So, that's a bonus.
That's where you make your money, in the boring stuff. The stuff where no one else looks, no one else wants. That's where money's made. I like that. Someone quote myself. Let's get into, let's have a look into Freshly Squeezed. Let's have a look at where the VIX is at. You want to take a swing?
Yeah, it's going to be the ECB today. We've got a big ECB meeting coming up, about to cut interest rates, which is actually what I'm going to talk about in the big buy. Obviously, our theory is that the euro is in the bin at the moment. So is there going to be a revival or not?
Wow, really? You're looking into that. Okay, so you must find some compelling evidence, because we feel like it's in the bin. You want to take a swing at where VIX is priced?
Do I want to take a swing at where the VIX is priced? Sorry. I'm going to take a swing at... I don't know. I feel like it's a little bit lower today.
It is 1944. 1944 is where we're priced at. We are still kind of just sitting in this range here, which, to be honest, I was expecting to be a little bit up here, considering we are, 13 days out from... no, maybe a bit more. 20 days out from an election?
Yeah. Is it November 8th, the election?
No, November 5th. November 5th. Yeah. So I've taken a swing at 20. Someone do the math and let me know if I'm in the area, John. I'm in the area, all right? I might not got a hole in one, but I'm on the green. We should
do that as a game as we enter every day. We want to know if the VIX is higher or lower. This is going to be our game.
I think it's pretty easy to tell sometimes. Sometimes you can just mentally tell. You can just walk in and go, it's a VIX higher day today.
Yeah.
It's a VIX higher day. I can just feel the risk in the air. I've seen the headlines. Speaking of headlines, you see that guy from One Direction died.
I know, yeah. God, that's a crazy thing to see, isn't it? That's not what I expected.
Not
to
tradable.
See on news this morning.
Yeah, not tradable. Sorry. Not sure if that event's tradable at all, but interesting. Let's get through where prices are at today. Let's get you up to date. If you take your eyes over to the right-hand side of my screen, if I go ahead here, try something, just make it real nice and big for you. We're going to have a look up the top right here. Aussie dollars priced in at 0.18% up. The euro is pretty much flat. Anything below 0.1 I consider pretty much flat, by the way. So euro pretty much flat, pound pretty much flat, US dollar CAD up 0.22% today, and US dollar Japanese yen up 0.1, just getting out of that pretty much flat. XJO pretty much flat. The DAX is up 0.3%. The Nikkei is down 0.5%. Let's have a quick look into what the Nikkei's been doing recently, you can see slow and steady grind, but like every day chopping and changing. You can't really decide which direction it wants to do. But one thing I can tell you looking at this is the down days are a lot more aggressive, and then towards the close of the day, they do bounce back up. So people are ready to sell, but they're not ready to sell into the close, which is really, really interesting. So there are sellers interested in this. There are sellers waiting to pull the trigger on the Nikkei to take this lower, but the buyers are just stubborn as it continues higher, which is really interesting. The FTSE down 0.4% after a rampant day yesterday, which we talked about even earlier in the week with claimant count change coming out positive in the way that it did. Sorry, no, it was CPI, was it? I'll confuse myself. Anyway, the S&P 500 is up 0.27%, still breaking those all-time highs. Someone riddle me it. I don't understand.
Yeah.
Coffee. Sorry, do you want to touch on this for a second?
Yeah, because I just think like it's one of those things where obviously we've talked a lot about what we feel is going on in the market right now, but it's also you have to keep a smart hat on, right? You know, there's been no confirmation of anything right now. So I think if you are a trend-based trader, then equities at the moment are still technically long, aren't they? There's just just buy it. Yeah. There's nothing there to see. Obviously, you can have a bias, right? And to me personally, I don't want to be involved with the equity market right now. I don't want to. I'm sitting on the fence. I'm happy to say that I'm sitting on the fence. But I think if you're a trend-based trader, then you know you can't really ignore that. I think I did some research, and I think the last sort of 14 out of 15 times where the S&P 500's broken into all-time highs again, the markets continue to rally after that. So you can't picking a market top is nigh on impossible, right? You know, there's the saying that the clock is the clock is right twice a day, isn't it? Yeah. What was you going to say?
Over September and August, how's your performance been?
September, August was... So September, I didn't really do anything because I was on holiday all the time. So there was zero performance. August, I actually had a bad month, so I was down 4% in August.
Even with everything going on, if you would just held the S&P,
okay, yeah, make me feel better.
8%.
Yeah,
just buy, idiot. Yeah, I think that's the screenshot. That's the LinkedIn post today. If you're not following us on LinkedIn, I'm just gonna put this up with ... because why I'm speaking to myself here, by the way. That's directed to me.
I can relate.
It's just frustrating, isn't it? Anyway, let's continue as we go through. If you need some not financial advice today, look at the screen. Coffee is up 0.2% so far today, sitting in that kind of slow and steady grind like the Nikkei is too, slowly heading higher. Gold 0.3%, also pushing for all-time highs. Someone help. Nat gas down 1%, really coming down into this area now, which is super interesting. We did talk on nat gas where we would look for different areas to buy. And it is sitting right now in that 2.26 area. So keep an eye on what nat gas is going to do. Silver's down 0.6%. Did eventually hit that 32, which we were pushing for ages through August. We did eventually get up there. Sugar's up 0.3%. That's seasonal play. We spoke about this. It was one of my seasonal plays that I shared with everyone. Get sugar, right? Nailed it from date to date. Like, look at that run. From date to date, it nailed that seasonal play. And it was like an 89% win rate over 20 years. 2025, in October, buy sugar.
Yeah.
Not financial advice. Let's continue.
What's interesting about this, though, is I think, obviously, we talk about this a lot and we tried it. I think what we should do, and chat, let me know as well if you think this is a good idea, is how would you get involved? Like, how would you put this into a technical sort of setup strategy, you know, because it's all we talk a lot about, you know, this is good between that time and that time, but what is the trigger point for us? I think would be something good to kind of bring to the show, because we do talk about a lot of different things, but you know, we cover a lot of zones and things like that. So I do feel like I want to try and bring back a little bit of the how do we actually execute on that, because I think we
I like
probably
it.
do it in very different ways.
Yeah, we do, and we do execute differently. We know that we'll be in same positions, but have completely different entries and expectations. And I guess it also comes into confidence as well. But let us know, chat. You guys want more action? Do you want more actionable how and when we execute, or do you prefer the ideas? I guess that's the question, right? But oil's also down 0.8% today, pushing back towards these lows now, getting in and around those 60s, right? We're at 70.06. We have dipped into the 69s twice over the past 2 days. Looks like we're on track to do it again today. Bitcoin's down 0.6, Ethereum up 0.5%. Aussie 30-year yields up 1.2% today. Aussie 10-year yields up 1.5%. Aussie 2-year yields not up that much. I thought we would see a little bit more. I'm not going to lie.
You sounded disappointed then.
Yeah, I am a little bit disappointed. Let's have a quick look at the Australian interest rate just to get an idea. Let me go.
Yeah, because the RBA is one of the only central banks now that are just holding. And typically in a normal market condition, I would be like, okay, well, why are they holding? Well, indicators are still fairly high. Inflation's still fairly high, not really at target ranges yet. They've got your unemployment rate is okay, things like that. And it's you would be normally like, okay, well, the Australian dollar's a good market, I would say, is a good position to be in from sort of the overall median outlook. But it's interesting to see how China has really crushed any kind of Australian dollar moves.
I mean, yes, over and over again over the past few years, I've told people the correlation between China and Australia is utmost importance, and I think now people are finally seeing it. There you go. What I find really interesting is only 50 basis points, this gap here between the interest rate, the actual interest rate, and the 2-year bonds. And we're actually pulled that back in again. So it's even telling you that the bond market's not expecting the RBA to really cut. They are leaning more towards the cut than a rate hike. And that's what these kind of 2-year yields are showing you, right? Forecasted March is when apparently the first cut is forecasted. But we've still got a long time till then. We've got a lot of room of where this can go. It can go up, it can go down. And as I said, if anything, I think if China was performing, I see these Aussie 2-year yields being up here.
Yeah, interesting concept, isn't it? If they do follow through with any kind of big stimulus, and it's like big stimulus, then that would be very interesting to see how the RBA plays this.
Yeah, that's a chess move, isn't it? That's the... I was going to do an analogy, but it's going to be sports related, and everyone's going to look at me with a blank face. So don't worry about that. I was going to lean into it. But what I found super interesting in a little bit of research too is looking at the 10-year inflation expectations out of the US. In 10 years' time, it's still expected to be at 2% CPI.
Yeah, and
I found that really interesting. Because obviously a lot of the forecasts in what people are wanting and expecting is like, when I say like, I'm not just looking at the 10-year figure and it says 2%, like from here all the way into the next 10 years, it doesn't change. The market pricing in zero change in CPI for the next 10 years.
Yeah, I'll take that with a pinch of salt.
Yeah, I know. That's what I mean. I find it super, super interesting. That's a random fact that I'm going to throw at you. It's going to smack you in the face, and then we're going to move on. I just found it super, super interesting. Let's have some fun. Let's get
into the big part. So I've been very vocal in my thoughts of the euro. Right, it's not been very.
Not you. No, anyone take a guess? Anyone take a guess? What John's thoughts on the euro are?
I feel like I should get a T-shirt that says "Euro in the bin" or something like that, or like something along those lines. I feel like I should.
Smart decision.
Tries longer the whole approaching the election. Yeah, absolutely. Yeah, it's not a smart decision. But yeah, going into some analysis then, right? So euro or euro dollar at least has been on this sort of downward spiral since the 27th of September. Now that date is going to become quite interesting in a moment because I'm going to go and show you some interesting seasonal stuff. But I've took a little excerpt here out of a article that I saw on Yahoo Finance, and they were talking about the interest rate cuts. Yahoo coming out of the ECB, and I was reading it and I was like, well, yeah, there's you have to read through the waffle to get through to the kind of good bits. And one thing that stood out to me was this little comment here, and it was made by one of the French central bank governor, who actually is a rate setter for the ECB, saying victory against inflation is in sight. A cut is very likely, right? Now, we know that a cut is likely. And I actually saw a piece as well that President Lagarde had gone to Slovenia, I think it was, because that's where they're meeting for this ECB meeting. Yeah. And she was in and amongst all the market traders and asking how they feel about prices, and they were fairly happy with where prices were at the moment. So obviously there is a little bit of...
Because they made money short in the euro?
But maybe, because they listen to us. Yeah, so maybe the sentiment across many European markets is okay, but the problem that they've got is Germany, right? Yeah. Germany is the big problem. Now, I've got some charts here that I'm going to go through before I go through sort of Germany. And this is an interesting chart that I brought up on Season X. So when you told me that you can look into events and stuff, I was like, I'm going to go do that, right? Yeah. So what I've got here is an ECB rate cut seasonal chart, right? And it's the trend around the ECB rate cut of euro US dollar over 22 events. Okay, so the line there, that is the cut announcement, right? So it gives us kind of a 30-day. I've done like a 30-day period here. Now, George, you might have to say you shouldn't really do that or whatever, but I thought I want to see the grand scope of what usually happens or what goes on before an event. Now, around about 14 days before a rate cut, we tend to see a little top in the market, which is really interesting because when I went to euro US dollar prices and I went 14 days back, I was like, oh, there's a top there. There's a top in the market. The market is going. Now, that could just be coincidence, right? It could just be coincidence that there was a top.
Seasonality
at that point.
Sometimes it's coincidence, sometimes it's not, right?
Yeah. But I thought that was quite interesting. And obviously, we've seen a decline since that, which has also been matched fairly interestingly here. Obviously, there's usually a little bit of a bump up, which we have had, but it's not really been that significant. Now, typically, after a rate cut, what I find interesting is that we can usually see a little bit of a bullishness for a day before seeing that sort of continued momentum. And again, this is going to come with some caveats, right? Because in the last meeting, President Lagarde, when they did cut rates, they left the door open for further rate cuts, right? There was no talk of, no, this is just a rate cut and hold, like other central banks have done. They left the door wide open for more cuts. And they were saying, we're going to be data dependent, X, Y, and Z. I've got a funny feeling there might be a similar play with this one. There might be a similar play. And the reason being is because of what's going on in Germany, right? So I looked at German GDP and it's been fairly flat, right? If anything, pushing a little bit more towards the negative side. The last time we were above 0.2% in a quarter was back in 2022, Q3 of 2022. So not doing well, right? We know this already because we talked about this a lot. German manufacturing PMI as well, usually above 50 is what you want to see when you're looking for growth or expansion. Below 50 is contraction. We're well below that. The market is struggling to get any kind of traction here. Consumer confidence in Germany as well, in the bin, right? I'll bring the same back.
There it is.
In the bin, right? I thought we should do a bingo game or take a shot. So
8:30 a.m.
8:30 a.m. Take a shot, bang. So for me, the euro needs something. It needs something. It needs some stimulus, right? It needs something to really get this going. Obviously, at the moment, if we go check out the euro interest rates, they have been cutting. They're one of the early sort of cutters in the central banks. They started cutting back here in June, and we can see they cut again recently as well. Now they're expected to go from 3.65% to 3.4%. So what I've done is I've kind of put the two, or the sort of indicators together as well, just to kind of give me an oversight of what I feel the market's doing at the minute. Obviously, when I compare it to the US dollar, we're at 5% rate. So the US dollar at the moment, that is expected to come down, but potentially only to 4.5%. ECB expected to go down to 3.4%. If we go have a little look at the inflation rate as well, US is a little bit higher than the euro, but the real kind of kicker for me is the GDP growth, and I've talked about this before. US GDP growth is really good at the moment compared to euro. It's you know, there is no growth essentially going on in the euro area. So I think for me, it needs a kicker. Now, looking at price action, you'd be saying, okay, well, I want to be short this market. Well, do I want to be short this market right now? And we're coming into a major level of support. So for me, euro is still a market that I like as a short, and I wanted to kind of reaffirm that to myself because of, you know, what's going on. Even though we're getting rate cuts, I still feel like the market will favor downside here. But do I want to be short here is the question, right? That to me, from a risk reward perspective, isn't great, right? So the way I like to sort of trade a market is I'll always look for a pullback before I try and get into any kind of move. Or if I'm following the trend, I'm looking at lower time frame trends. Now, because we're coming into this area where we've seen some strong growth in the past, this could be a really good area for those that have been short on the play that the ECB are going to cut to get out of these positions, right? So my theory today, my action today is a potential rebound from this area back up towards the sort of what spot 0950s. This is where I would ideally want to be short. If someone said to me, where do you want to short euro? That would be against the US dollar anyway. That would be my zone. Yep. So all I'm saying, if you are short right now and you've been following this trend down, just be a little bit aware that there is a key area coming up, and this could be a really good area for likes of hedge funds to take profits. I was having a little look at the commitment of trader reports as well. You know, this coincides really nicely with the commitment of trader report signal long on the US dollar index as well. We know the US dollar index is pretty much inverse of the euro US dollar, but we had a long signal from the commitment of traders on the 24th of September. And look what price has done since then. And that long still remains the same at the moment. And we've still got a little bit of upside room here too. So I feel like the sentiment's changed on the US dollar, because we always have to kind of refer back to the US dollar when we're talking euro US dollar, but also the sentiment's remaining here, and I just don't see any upside right now. That's going to be long term anyway. That's it.
100% agree. I have no rebuttal at all. I wonder, just because obviously the price action there is not sexy to get an entry, if there's somewhere else we can capitalize.
Yeah, so that's a good question. I quite like euro yen, right? Now, the problem I've got with this at the moment is the sentiment on the yen, and we don't really have any strong indicators from Japan coming up like until next week, right? Thank you, Andrew. So I do like euro yen. I still think yen's a good play, right? I just think the market's moved away from it a little bit until we start to see some risk coming back. Whether the election is that risk or what, we've got Tokyo CPI coming up at the end of next week, which I think is going to be a potential kicker as well, because at the moment I think Japan have said if there's no sort of real change in inflation, they're not going to do much. I mean, can you really trust what Bank of Japan say? I don't know. But
what about the euro against the Chinese yuan?
It depends. It depends.
If they land a stimulus deal, you can run it.
Yeah, I mean, yeah, but I don't know what the
I'm getting a read on your risk sentiment. That's all I'm doing.
Yeah,
I'm not trading that. There's no way I'm trading
No.
that. Right. But I just wanted to probe and see where we sat there. But guys, we've run out of time. We've run out of time. John, thank you for that analysis. Actually, I thoroughly enjoyed that. And you're right. Maybe we do need to be a little bit more chart orientated. We have fallen away from that recently. And it looks like Andrew enjoyed it as well. But I enjoyed seeing areas. So tomorrow, the big bite. I'll bring some more chart analysis, something a little bit more actionable, something a little bit more insightful, shall we say. But without further ado, guys, we'll be back tomorrow, 8:30 a.m. British Standard Time. If you haven't subscribed, consider it. Join us every day, Monday to Friday, 8:30 a.m. John, we'll see you tomorrow. Peace.